interest rates. What the heck is happening with interest rates? Where have they been? Where are they going? What's happened? Why is this such a big topic this year?
Well, so it's really been a topic for the last 2 years. I mean, like, I would really say it started back in the pandemic. So the reason why they keep interest rates low is essentially to stimulate the economy. They need interest rates low. It's easier for people to borrow. It's easier for people to borrow for housing, for companies, for leveraging everything to maintain that. And so with that, we had really low interest rates, 3%, under 3%.
You mean a 3% interest rate isn't
under
normal?
3%. Yeah.
I think that should be the new norm. I think it should also be 75 degrees on Thanksgiving, but I'm not going to get away with that, am I?
Everyone loves like low interest rates, but ultimately what we've statistically seen is that between 4 to 6, probably even a little bit higher, probably between like 5 and 6% is a normal interest rate. That's like where we were in the 2000s. It's where we are, like, we've kind of hit it a little bit once in a while in the 2010s.
You're younger than I am.
Yeah. No, I mean, like,
we bought our first house at 7.5%, and we thought it was great.
And that's really why everyone went through that buying frenzy the last 2 years. Now what we're seeing is a correction. Is it an overcorrection? Yes, probably, but they need to control other things. And one of those is inflation, and housing is 33% of the house, like, of inflation.
Has a huge economic footprint.
So it does. And so that's what they need to bring some pricing down and normalize some of the other markets, and it's going to have a little bit of effect on us, but ultimately a 6% interest rate is still decent. Rent's going up. So like rents are going up 12%, interest rates are going up. I mean, you're paying somebody else's mortgage.
Milk is expensive.
Yeah. Oh my God. I went to the
groceries
store.
Are
Eggs
expensive.
were like $3. I was like, and that's not even at Whole Foods. That's the difference.
No, so many great points in there. Like, I think first and foremost, we got really comfortable with a 3% interest rate, and people forgot the fact that 3% interest rates, it's not normal. It's not healthy. It was to combat a major world pandemic and complete social and civil unrest. Like, our country was screwed up.
And the election year. So, and election years always have the lowest interest rate. Like, it is, because they need to make sure the change isn't too drastic.
Now, what I would say is, if we're gonna point some blame and kind of say, hey, something should have been done better, realistically, the change of the interest rate should have started earlier in 2021. Hands down, I absolutely agree with that. You know, that if they could have started that and more gradually done it, it had a really negative impact on people in general, all right? Their mindsets, their pressures, just their way of reacting. Like, we saw a lot of crazy happen this year.
It probably should have happened in 2016. It probably should have happened in 2018.
Right.
And then, yes, we could have cut back in 2020. I mean, all is hindsight. I mean,
totally. It's easy to say from the passenger seat.
And
we're not making those decisions.
They made those decisions for other reasons. And we did. I mean, like, back in 2018, 2019, we went up again to 4%, 5%.
Yeah.
I mean, we've seen that. Did it affect our market? Not really. I mean, we had a little bit of a slowdown in that time frame, but prices still came back once we normalized to it. And that's what this is. It's literally the Fed saying it's breaking so that we kind of get out of this trajectory, so we can get on
tailspin.
So we can get on a normal thing. I mean, it's insane, but
for certain,
people are still always going to need to move, and at that point, you got to make that decision on your own individual basis. Is if this interest rate is good, then still purchase. If it makes more sense to rent, then rent at that time. But again, that's an individual person's thing. So that's the conversations that we have to have on that individual basis.
Well, I think just the point in remembering, you know, and just to kind of summarize it, is that we're at a pretty healthy interest rate right now. It feels negative to those that have been looking and, you know, had a different rate enticed in front of them, but we're at a pretty healthy interest rate right now. In fact, we're still at numbers that are some of the lowest numbers we've recorded in the last 5 decades.
Yep.
So when we kind of put it back contextually and kind of look at it from that perspective, then it's easy to say, okay, you know what? It is what it is, and it's not a bad thing. And when we always have to remember that these shifts, changes, All of these things stabilize our market, and stability
Yeah.
is the one thing that we're craving in all of this.